Is the housing boom coming to an end? Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to have a look at this article from ABC News discussing, or putting the question out there, housing boom may be halted by regulators or economic trends. Our analysts are warning us. Well, we'll have to see. What do you think, everyone? So, because some people are questioning the news, because one day I'll be talking about delinquencies are down, depending on where you look. But then the previous day we're seeing reports of apparently forced sales going up, or distressed sales going up, or spiking. Depends on the area where you are. This is the problem with a lot of the headlines. It may be true overall, but it may not affect the particular area that you're in, or what you're looking at, or comparing houses to apartments. They're two different sectors. Some people are completely ignoring apartments, someone said in the comments. So let's look at this. The housing boom coming to an end. Housing boom may be halted by regulators or economic trends, analysts warn. Do we trust the analysts? Some analysts are warning that Australia's multi-decade property boom may be about to end, but most agree that will not happen this year, with double-digit house price growth widely expected in 2021. And they're talking about the boom ending. Does that necessarily mean a correction? So people that are hoping that the boom will come to an end and then property prices will go down, 40%, like what the RBA was modeling. Is that necessarily going to happen? Or are they just going to flatline or have a slight decrease? Maybe it'd be good, just if we had a few years where houses didn't go up double digits. Wouldn't that be a nice change for Australia? Well, it's happening. Look at apartments, guys. You bought in 2009. You're selling for less. Despite concerns about the pace of property price growth in Australia, regulators may not step in this year, analysts have warned. Without regulatory intervention, most agree property prices will keep rising through 2021, possibly by 10% or more. Now, there's an issue with this. What we're seeing here, I would argue, is the Cantillon effect, everyone, manifesting. This is when you have a relative change in the price resulting from a change in money supply. The change occurs because the change in money supply has a specific injection point into the economy. Now, let's just theorize. What sector do you think has been stimulated by the government? Where do you think money's getting injected to? Property. So, and we've got a cash rate that's just insanely low. I mean, what are we sitting at? 0.1. I updated this chart back in November when we went down. You could barely see it. But looking further ahead, one leading analyst suggests Australia's multi-decade housing upswing could be nearing its end, and that prices could ease through the decade once this short-term price surge has ended. However, he said much depends on the future level of immigration, the persistence of the working-from-home phenomenon, and the level of interest rates in coming years. The longer-term bull market that has seen above-trend growth in property prices since the mid-1990s may be close to an end, Dr. Shane Oliver from AMP Capital said. Well, he's talking about the issues of immigration. We know that student accommodation is... International students are feeding into student accommodation and also feeding in the university sector. You've got migrants coming to Australia that's also feeding into a lot of that property, that investment-grade property, even if it's just temporarily. You've got tourism. Tourism is just non-existent too. That's temporary migration. Working from home. I wonder if that's going to take off. I suspect. My gut tells me that the benefits of working from home and having an office. I don't think it'll be as much as people hope, because there are some benefits to having separation. I've done both. Now I'm primarily working from home, but we're renting up the street, so I'm here every morning to catch criminals trying to break into my office, but I still have that separation. The only good thing is it's a commute on foot. So we'll have to see how that manifests in coming years. If you get more people working from home, I think there'll definitely be some decline in demand for commercial office space to an extent, but I think there'll be more flexibility than anything. the level of interest rates, well, yeah, that's going to have a big impact. So prices to keep surging in the short term. The economic trend teams at Australia's major banks have been monitoring property markets across the country. ANZ economist Daniel Gradwell said Melbourne's housing prices had fairly recovered their declines from last year, and the pace of growth was slowly catching up with other cities. We can see here. There we go. There's good old Melbourne. It's up. Where's Brisbane? We're red. Oh, great. We're right at the top with Adelaide. Fantastic. Which is funny. You know, my house hasn't gone up that much. The evaluation, according to my bank, is down about 200 grand. I didn't believe the evaluation. I thought it was a complete joke. But still, it's because the place across the street sold for less. So when you see these numbers and you think, oh, fantastic, my property's going gangbusters, you need to look around the area, guys. You need to really go down to your micro level. And they're cleaning the place up. I wonder if they'll flip it. He says the strength of the recovery in national employment, which has been far faster than what occurred after previous downturns, has been a major support for property prices around the country. Speaking at an event hosted by the Urban Development Institute of Australia, the UDIA, this week, Mr. Gradwell said ANZ's job advertisements were sitting at a 12-year high and job creation was running strong, which suggested any job losses from the JobKeeper program finishing would only cause a temporary blip in the unemployment data. Well, a personal example, my sister-in-law, she was forlorn from her airport job. That's now come back. And unfortunately, with the travel bubble, now work is ramped up, but she transitioned to another job as well. She's now a nanny, taking care of a special needs child for a family. What's quite concerning is the amount of paperwork and hoops she had to jump through just to get into that position. She'd actually done the qualification, hadn't used it for a while. But to get in that position to be able to take that job, she needed to spend a decent amount of money. I think between maybe $2,000 overall if you add it up. There you go. That's the bottom rungs of the stepladder that have been raised up to provide protection to consumers. But it is limiting people's ability to get a job. Just remember that, you know. But now she's got 2 jobs and she's working both at the same time, and they're flexible with it. So, if anything, this whole process might have been probably one of the best things for her to get more money coming in. So, and I wonder if she's alone with that regards. I bet you there'll be other people too that come out of this in a better situation. We have a decent level of confidence that we'll keep on creating jobs at a decent pace, he said. And here we go. So this is interesting. Months since the lowest unemployment rate in the cycle. There's the 1990s recession. The recession Australia had to have. Wow, look at that. Nearly, 128 months. There's the 1980s recession. There you have it. The GFC going down and boom. I mean, that just doesn't compare. That shows you that this isn't, it's a different type of recession, or that the government just throwing so much money at the economy has dented that. Now, what's the problem with that? If they've dented it and then they... Remember, we've got to pay it off. We've got to pay it off. So it's either going to be more taxation or they'll inflate it away, which will reduce the purchasing power of your savings. He said with historically low interest rates, strong employment growth and high consumer confidence, the response to the government's home builder program had been nothing short of incredible. Okay, now that I have finally got building approval, and I'm just literally ringing up. Yesterday, I was on the phone to house raisers here in Brisbane to get our house lifted. Okay, I've managed to demolish all of the facade. I've taken the roof off because I've got a deck on the side and an old enclosed balcony that we're getting rid of. And so I thought, okay, now it's time to we've got the building approval. I've got all this demo work done. Now's the time to move the first bit of the house. Because where I am in the studio, this is like a modern construction at ground level, where the Queenslander is about just shy of 2 meters up off the ground at the front over there. That's going to move and rotate. We'll twist it a little bit. And this is going to stay here so I can keep working. But I was on the phone to people and everyone's flat out. September, August. It's just going crazy. It's going crazy. One guy's saying he's never seen it like this. And we don't have too big a job. But hence why the video production may be slightly less than normal, because I tend to come in here in the morning, do my videos, and then I'm there demolishing things, which is quite fun. You know, just got to be careful when you're up on a ladder. Anyway, so I'm not surprised at all. I mean, with the home builder uptake, if we have a look here, I'll just bring up home builder. We can see here how many people have applicants. There have been 35,000 in Victoria, everyone. 23,000 in New South Wales, 26,000 in Queensland. Only 376 in NT. 17,000 in WA, 12,000 in South Australia, and 3,000 in good old Tassie. So you can show you the East Coast. I mean, this just shows you the states, doesn't it? I'm surprised. Well, I'm not surprised that Queensland got higher than New South Wales, because housing affordability is a bit better here than it is in New South Wales, everyone. And we'll be looking at that later after this video, or in this video. So, he said the demand for detached houses was booming, and construction costs for houses were rising quickly across the country, while construction costs for units and apartments was falling. That's the problem. So, you get all the free money, and we're not getting it. We're doing owner builder. But everything's going up. Everything's going up. So I'm saving all my timber that I'm taking off this building, even though it's crappy and old. It's hardwood. There may be a bit, I have to cut off the dodgy bits, but I'll save it just in case. You see the memes of people driving past, you know, a billionaire. I just drove past a billionaire. It was a guy with a load of lumber in the back of his trailer. However, Mr. Gradwell said there was a chance regulators would have to step in at some stage, as has happened in New Zealand recently. I just think that the longer Australia has these really strong price movements each month, the more likely we're going down the macroprudential road as well, he said. As much as there are some benefits to rising prices at the moment, in terms of the wealth effect and the impact that has on people's spending patterns, I think it's also worth keeping in mind where some of the downside risks might play out over the next 12 to 18 months. And the wealth effect is essentially the governments like it, because if you feel like you're wealthy, you've got all this money, you know, I've got $1 million house, so I have to justify buying that new toy or that new, you know, consumer item to go with my expensive house. Don't think it doesn't affect everyone. Regulators are unlikely to step in this year. Christina Clifton, a senior economist with the Commonwealth Bank, wrote a note to clients this week on the same topic. She said strongly rising dwelling prices had raised the prospect of regulators stepping in to curb lending activity at some stage, but she didn't think it would happen this year. She said the Reserve Bank and the Australian Prudential Regulation Authority were prioritising financial stability and lending standards rather than house prices, and we've seen the same thing from our Reserve Bank governor. And I will bring that up here, where he's essentially not interested in house prices, everyone. You know, the RBA will not raise rates to slow housing boom. There are various tools other than high interest rates to address these concerns, which is housing boom and housing prices, leaving monetary policy to maintain its strong focus on the recovery of the economy, jobs and wages. And remember, when they're talking about wages, the RBA have a stellar history of predicting wage price growth. Oh, wait, no, they don't. So, I mean, it'd be tough to predict it, guys. It would be, wrong chart. It would be tough to predict it. So that meant they were focusing on key metrics such as the share of investor lending, interest-only lending, and high loan-to-value ratios, she said. And none of those metrics were a concern at the moment. Based on the current trend in these metrics, it is our view that we're unlikely to see any macroprudential policies put into place until 2021, she wrote. In fact, proposed changes to responsible lending rules may mean that lending becomes a little less restrictive in the near term. Last month, APRA's chair, Wayne Byrne, said that growth in property prices and mortgage debt in recent months was no cause for immediate alarm. And what I think we're seeing here, everyone, you're seeing a two-speed economy. You're seeing people that have the financial means to buy these properties and, well, to service the mortgages at least at these crazy low interest rates, which I would be shocked will get any lower, particularly with Philip Lowe's reluctance to go into negative interest rates because it doesn't make any benefit. And that's what they're thinking. They're thinking 4 years. And people are saying, oh, you got to think about 30 years with a mortgage. Well, do you? Sure, that's the amount of time you got to pay it off, but you can pay it off quicker. You know, nothing's stopping you hitting it hard. What about long term? However, economist Shane Oliver from AMP Capital has taken a much broader look at Australia's property prices. He says real property price growth has averaged around 3% a year in Australia over the last 100 years, and there have been 3 major long-term booms highlighted in the green arrow in the image below, and 2 major long-term busts or weak periods in that time. He said the third and current long-term boom began in the mid-90s, and it had taken real property prices well below trend to well above trend. He said that cyclical upswing would likely continue into next year, and his own forecast showed price growth of another 15% by the end of next year. So here's the long-term trend. Last 100 years. So 1926, everyone. Look at that growth. There you go. Guys, just buy property and sit in it for 100 years. Some people pretty much have. Some people pretty much have. So there you go. Look at the real house prices. Up. Slowly. Could you really... I mean, that's a bust there. Could you... I guess that might be a bust. However, he said some of the structural factors that had driven the long-term decline in interest rates since the early 1980s, which had supported property prices for so long, could be coming to an end. Some of the structural forces that drove inflation lower over the last 40 years, like globalization and deregulation, look to have run their course, he wrote in a note to clients on Wednesday. If inflation is bottoming, then so will interest rates and the super cycle of each new economic slowdown, leading to even lower mortgage rates and ever higher debt levels, driving ever higher house prices relative to wages, will come to an end. He said the collapse in population growth over the last year could see a shift from chronic undersupply in housing to oversupply, as long as population growth remains constrained. Now, when I read that, I see politicians will do everything they can to increase population growth. Am I just becoming too cynical and skeptical now? Can you see them opening the floodgates, everyone? Because there's other articles that are talking about labour market supply. So we need to revise our immigration policy. If population growth remains as weak as the government is projecting over the next 2 years and construction stays up, we'll be moving into clear oversupply, he said. This will be healthy in terms of improving housing affordability for new buyers and renters. He said the property market could continue to surprise, for example, if there was one last low in interest rates, with the RBA adopting negative rates, and if population bounced back faster than expected once borders reopened. That said, there are good reasons to expect that the forces that have driven average Australian capital city property prices well above trend and well above price-to-income ratios seen in comparable countries over the last 2 decades may be at a close or have finally run their course, Mr. Oliver wrote. So could the decades-long housing boom be coming to an end? Or is this just foreshadowing for the next chapter in the story of Australian housing, in which our political class will bring more migration over to shoot up property prices? Am I getting too cynical, guys? Am I? So let's have a look at housing affordability quickly. This is the from last year, middle of the year. This is first home buyer affordability, 30% or less of your disposable income. That's what you need to maintain a property, and this is the share of the market that you have access to, properties on the market. Really, only Brisbane and Perth have anything for people from 60% down. Everything else, just not affordable, guys. Housing affordability. Here's the price growth, 30 years. Sydney, 565%. Units in Sydney, 430. Same thing for everything else, guys. I mean, housing affordability, it's gotten to a point now where you need both people in a couple, in a relationship, to work. That's just how it has to be. If you want to have one person as the sole breadwinner, you've got to be flexible. You've got to have multiple jobs. And you may think, oh, that's terrible. It's just how life is, guys. You've got to adapt to it, I think, sadly. This is showing our house price index from 2017. And you can see Australia, we've grown, but the poor Kiwis, Canada as well. I mean, it's just gone crazy, guys. It's just going nuts. This is one reason I suspect is that people are subconsciously or even consciously concerned about all this rampant money printing and QE, even if they don't quite understand it, and they're just maybe just worried about the state of the economy and everything that's happening around us, all in the world and in the news. And maybe they're being attracted to real assets, to something physical that you can, at very least, use and live in. And the solutions, well, no surprise here. Long term, we need to get off the property dependency, everyone. But that's going to require a culture shift here in Australia. We're all so obsessed about it. I am too. That's one of the reasons why, well, I started doing this channel. I started talking about social justice issues, and then I started looking at some property things. Because as an architect, it was quite frustrating when you saw how much a property would sell for compared to how much you could earn to do the documentation and design so people could actually build that. And then I started to realize how much they're juicing up the market. It's just an obsession here in Australia, everyone. Is it even possible to shift our culture off that? Because long term, this has negative ramifications, not just in housing affordability. I would argue, and I'll bring this up, it is to do with economic complexity. Our manufacturing base has been decimated here in Australia. We don't produce anything complex. We only export simple things or raw materials. I think that's one reason is because it incentivizes you to jump into property. Why would you bother taking the risk of starting a business or hiring staff, of dealing all of that when you can make more money owning a property? Sure, you've got maintenance, you've got other costs involved, but that's a lot less exposure to risk, particularly now in the hashtag #MeToo world. You can't forget that, can't dismiss that. Or you offshore your work. And you get this K-shaped economy where we've got two speeds. You've got people that have the financial capacity to get in the market at all costs. You've got other people that are being pushed further and further away. We'll have to see, guys, if we can actually get off this merry-go-round. Because Labor at least tried to put something on the table at the last election. I think we need to phase it out slowly but surely. So, thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using any of our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can help us with our share trading. If you sign up for SelfWealth, we both get 5 free share trades. So then I can go and buy my AGL shares, which turns out to be the worst performing stock on the ASX 200. Awesome. It happens. You don't let these things get to you. You can't have all winners, guys. That's the trick. Or if you sign up with Stake, we each get 1 free share once you fund your account. Independent Reserve for your crypto trading, everyone. If you sign up for there for trading your crypto, we'll get a small share of the revenue there. Or you can buy a merch. We have pocket squares, handmade by Rachel, right here in this very own Queensland sweatshop, or using good old Gold Pass from the Perth Mint or PayPal. Take care, everyone. Have a great day, and I will see you in the next episode. Bye for now.